We can see your feed. I just started seeing some of the comments hit my screen here. If you guys are having any issues with the audio or concerns with the picture or any of that kind of stuff, just put it in the comments section. We'll make the adjustments as necessary, and we'll go from there. Um, let's see here, Robert. So let's go ahead and kick this off with some of the questions that we saw in the Twitter feed. Uh, I'm getting a little bit of feedback on my audio. I don't know if the people listening to this are getting that. Robert, are you getting the feedback on the audio, or is it just pretty clean?
Nope, no feedback.
Okay.
I hear you loud and clear.
Okay. Sounds good. Okay. So one of the first things that I'm gonna cover because it came up as one of the questions was, what is the most legit case against Bitcoin? And there's a lot of people that are constantly asking these questions. It's real easy to just not ask that questions because it's convenient for people. But let's hear your thoughts. I'm kind of curious how you think through this.
Yeah, I think, yeah, first of all, with the fiat currency standard that we're on today, it's not, although a lot of people think it's just sort of natural to have government money and that government, you can't really have a currency without a government. That seems to be the general mode of thought today, by a lot of people, by your average person. But in fact, as you know, we know, and most Bitcoiners know, money started as a free market selected technology. So people naturally decided what was the best technology for moving value across space and time. And that technology that was selected ultimately was gold. And really, government currencies, paper currencies, were just arose as warehouse receipts or redemption tickets for gold or other monetary metals, effectively. So I think the only case against Bitcoin today would be an immediate, coordinated global reversion to the gold standard by every government worldwide, which would, and this would need to be coupled with a global coordinated illegalization of Bitcoin, which you can't really illegalize Bitcoin per se because Bitcoin is just information, so it's protected under freedom of speech rights. But you could disparage it. They could subject it to a slander campaign, saying it's, which they already somewhat do, saying it's for drug dealing, terrorist financing, sex trafficking, etc. But you would need to do all these things, I think, in a global, coordinated, and concerted manner, as in moving all fiat currencies back to a gold standard, so repegging them to gold, while simultaneously disparaging Bitcoin across the board. I think that would be the only way to try and stop its expansion at this point, only because the knowledge of what Bitcoin is not very well diffused into the world. People still don't understand it, by and large. But that said, we'll get into more of this later, but the halving event next May for Bitcoin actually takes its measure of its soundness as money, will now be on par with gold as of next month, effectively. So time is really running out. If government was going to try to make a move and stop Bitcoin, I think they're down to the 0 hour if they could do it at all at this point. And frankly, we've never seen governments behave in such a coordinated, concerted way ever. So I don't think it's actually feasible, but possible if they could do that.
Yeah, I often say at this point they have almost got such a strong incentive structure to not come to the table collectively, mostly because of the fiscal spending side that you see. For them to then be held accountable to some fixed peg on the fiscal
Mm-hmm.
side of the house is where it comes off the rails for me from an incentive standpoint. So, like, every one of these countries are outspending the tax revenues and the tax receipts that they have. So, what in the world is going to make them all come to the table and believe each other that they're now all of a sudden just miraculously going to change their spending habits and effectively their election habits
Yeah,
of how they get
yeah,
reelected, right? Voting money into their districts. So yeah, I'm with you. Hey, and I got that note there. My audio is a little low compared to Robert's. I can actually adjust my mic boom. That might be a little bit better. Let's try that out. Adjust the knob over there. All
yeah.
right.
And that sort of dovetails into the game theory behind Bitcoin, which I feel like once you grasp that, you really start to see it as somewhat inevitable. Um, a lot of people call it, it's like a prisoner's dilemma for nation states, as in they can't ignore Bitcoin. It's already sort of monetized enough in real time to where they can't ignore it. And the fact that such a disproportionately large benefit accrues to the earliest adopters of it um, really instigates this prisoner's dilemma situation where each nation state is sort of looking at their own interests and one another's behavior strategically, such that they realize if they adopt early, um, they can benefit from something that's seemingly inevitable over the long run. So, if you couple that with too, like once these individual policymakers have some skin in the game or hold some Bitcoin, it really changes their view on it. Right, once they've got um, exposure to the asset, they tend to kind of start singing a different tune as far as when it comes to legalization or assimilation into the economy.
Hey, just so you know, I'm messing with my sound here because I'm seeing some comments in the feed saying that my audio is a little messed up. So I'm going to try to stick on a
Yeah.
headset to cut down on echo, and we'll see how that goes. Oh yeah, I can hear the. All right, so let's see how that works out. I think that'll work out better. Um, Now it's good. Okay, great. All right, now we can get on to the next one. I just got to wear the headset. Um, if folks have any questions while we're going through this, feel free to just pump the question right into the feed. I can see that, and then I can add it into the video. So I'll just show you a demo here where this person said, Preston, maybe mute your mic. So I'm seeing that, and I can share that with the audience. So yeah. All right. So as we
On that
look
last
at
topic,
mining, there's a lot of people that are talking about the efficiency of the mining process. I'm kind of curious to hear your thoughts on some of that.
I was going to say for that last question, if there's anyone that doesn't know what a prisoner's dilemma is, and the Money, Bitcoin, and Time, part 3 of 3, if you just search inside of the piece, the section called the long game. You have audio on me, Preston?
Yeah, I got audio. I don't know what's going on because I test ran this last night to make sure I wouldn't have any mistakes for tonight. But what I did do was have a Skype call. So I'm really sorry. I'm messing you up, Robert.
No, it's all right. If we could switch if you want, but
No,
might be.
no, no. I think I'm good. I think the sound is down enough that folks can hear better now. If not, just comment in there, and I'll keep making adjustments as we go. So sorry to mess this up so badly on the
So,
technical side, Robert.
oh, good. There's a chart in the section titled "The Long Game" in part 3 that shows sort of the game theory table of what a prisoner's dilemma looks like, and a little bit further down, it just shows sort of the game theoretic situation that everyone faces individually and even at the nation state level. So it's in the game of money. I guess the punchline is scarcity is the Schelling point. It's kind of the default strategy has always been to hold the most scarce money. And for the first time in history, we have a money that's absolutely scarce, meaning that it has a totally fixed, diminishing, and predictable supply curve that really can't be disrupted because it has a terminal inflation rate of absolute zero. So it's basically perfect scarcity. Um, so, anyways, I think that sort of in making the case against Bitcoin, governments need to act really quickly if they stand any chance at all.
Yeah, yeah. Hey, I want to give you an opportunity to talk a little bit about your paper that you wrote here. Um, I'll tell you, after I read this, it was a straight shot to my printer, and I mean, I printed this thing out, and I literally just put it right over there on my shelf. For folks that are curious, the name here, the number zero in Bitcoin, or the number zero in Bitcoin, and I mean, just a hell of a read. I mean, it was phenomenal. I would highly encourage anybody who's watching this, if you have not read that article, my gosh, you need to just Google that title, pull it up. In fact, let me just pull it up here on the screen so folks can talk, or so that folks can see this. And then I want you to talk about what was kind of like the aha moment of like, I need to write this article, because you were seeing what made you see that to write such an eloquent, just amazing article. Do you have a strong math background? It sure seems like you do.
Uh, I so I have an undergraduate master's degree in accounting and finance. I'm not a mathematician or anything. A lot of the history of the number of zero, I was actually using books, read two books about the history of zero. But the inspiration for the piece is that one of the most common arguments against Bitcoin is people are just like, what makes Bitcoin different? There's thousands of these things, right? There's thousands of cryptocurrencies. What in the world makes Bitcoin special? And I think without a firm understanding of a couple of concepts, one I got from Taleb is called path dependence, which entails that the sequence of events matters as much as the events themselves in the influencing of an outcome. And then two is game theory, as we just talked about a little bit. If you don't understand these two aspects about Bitcoin, it's really hard to understand how it's different. So it's not even the uniqueness of Bitcoin isn't necessarily in the technology layer, because the technology is open source and can be replicated and copied by anyone. But it is actually in the social layer or the idea layer. So in digging through history, trying to find an analogous example of some idea that emerged that radically reshaped, the economization of human action across time, it was a deep dig. And I finally landed on the number zero, basically. And it highlights a couple of things. One, that I say in the beginning, that many people think Bitcoin is just one of thousands of crypto assets. And that is true in the same way that zero is just one of an infinite series of numbers. But in fact, zero is special, and so is Bitcoin. And then I go into the details of why. But essentially, like without zero, mathematics is still possible, but it's just a tremendously more wasteful and less innovative system. So without zero, and I give an example of like doing arithmetic in Roman numerals, it's just a disaster. Like you have to do all these complicated tables and conversions just to do simple arithmetic. But with a zero, it sort of functions as a placeholder to say like the number 1104, you could have a zero at the tens place. So zero is actually signifying nothing in the tens order of magnitude for the number 1104. And with that, you just get you get a great ability to scale the number system while maintaining a constancy of meaning. So because it added so much efficiency to arithmetic, zero just exploded worldwide. Like it met ideological resistance in Europe, because in the European model of the world at the time was based on the Aristotelian finite view of the universe. They didn't believe in nothingness or the void, and they didn't believe in infinity. They thought all shape and number were kind of the same thing. So zero was like sort of heretical to that viewpoint, but because it was such a useful idea and added so much to trade and economics, that it couldn't be ignored. And as we know today, the Hindu numeral system, which is based on zero, outcompeted all other numeral systems, and now it's a universal language. So the argument there is it's more to focus on the idea of what Bitcoin represents. I say it's a discovery of absolutely scarce money that's out competing all other monies because it's essentially it is the zero of monetary policy, if you will. Um, and then I draw a number of examples of why that's true. So I guess the inspiration in general was to try and defray these arguments of people saying, it's not Bitcoin, it's going to be Ethereum or Litecoin or whatever in the world. I needed a really strong historical example for why Bitcoin is effectively an unstoppable idea.
Hey, so here's a question that somebody posed that I like. Here it is. How long did it take you to write the article?
I have been thinking about this for a long time. I've been facing that argument for years. Why is Bitcoin different? Whatever, whatever. And you start going into, it's path dependence and game theory, and people just gloss over, right? They don't understand what you're saying. So you're like, I need a real example of something that's done this before to to concretize what Bitcoin is. And I guess I landed on zero in probably November of last year. I published an open letter to Ray Dalio, had some feedback on that, kind of the same old arguments I'd seen time and time again. And I was like, all right, I've got to find the real historical example. And then I don't know how actually I found it. I was just digging, I just found it. And then actually reading these books about how much zero changed the world really opened my eyes to kind of how profound it is. So started ideating it in November. I put pen to paper in January. And then I wrote steadily more. The last week or two, I was really working hard to get it done. And like we were talking about a little before the show, you have to kind of write fast, bad, and wrong. Just get stuff on the page at first. And then the trick is in the editing. You have to edit it 4 or 5 times. And I've also found that to get the eloquence on point, you need to read it out loud to make the sentences sing. And preferably if you got, family members or someone that will listen to you. That can be really helpful. And it also helps to have a really good editor. And I had some good friends help me edit. So
one of my favorite books on writing is just a really simple, The Elements of Style is the name of the book.
Love that book. Yeah.
And yeah, it's very obvious that you've read it.
Yeah, it's so well written.
Yeah, you can usually tell when somebody's a fan of that book. But hey, I want to just pose a real simple question for you. Because I'm seeing all the people's comments kind of in the feed, and there's a ton of people out there that just really are maybe starting their journey. They just started learning about this maybe a month or two ago. And what would you say is the thing that is the biggest misconception for people that are first learning about this stuff? What is the thing that just every time you just kind of roll your eyes, just like, oh my God, how can't people understand that this thing is whatever?
It seems like the initial one is always you can't have a currency without a government. People are like, you have to have an army enforcing the use of the currency, otherwise it doesn't exist. And when someone says that, they're just betraying a total ignorance of monetary history. I mean, we have 100 years of governments enforcing the use of a currency. Before that, it was always redeemable or was in fact monetary metal. Right? It's money, like everything else we use in the world, is a tool that arose on the free market. And it was monetary metals were naturally selected as the tool that best served the function of moving value across time and space. So that's where money began. It has its roots in a free market history. And this, past 100 plus year experiment we've had with central banking that got us into fiat currency in 1971 is the anomaly. Right? We had 5,000 years of commercial history facilitated by money. 4,900 of those were free market-based money. Only for the past 100 years have we had central banking, or what I like to call monetary socialism, because it's just central planning in the market for money. Mm-hmm. And as we all learned in the 20th century, central planning doesn't work. So that's what I think is happening today. We're just seeing central banking come unraveled.
Yeah. All right, I'm going to go ahead and pull a question here from folks. Let's see what we got here. Okay, let's take this question here. This is a pretty basic question. What is the special ingredient that Bitcoin brings compared to other digital currencies?
Um, in a word, path dependence. In a hyphenated word, path dependence. And I would encourage you to read the piece about that. But it essentially means that the order of events influences the outcome. And this is especially true when it comes to complex systems like economies, for instance. And the real simple example that I give of path dependence is that if you take a shower and then dry yourself off, you get a much different result than if you dry yourself off first and then take a shower. So the actual order of events really does matter. And there's sort of two ways, once you get so far down a particular path, there's only two real ways to change the inertia or momentum on that path. And there's a pull method where you can introduce a technology that's, say, 10x better, right? There's a giant prospective gain for users in the market to switch to this new technology. Or there's a push method where you could actually have a very organized group of human beings or government sort of imposing the change. But this path dependence tends to insulate things from disruption because people just become accustomed to using it. So I think the example I give in the piece is that if imagine if say the United Nations or a world government organization tried to enforce a switch to a new standard electrical outlet size worldwide all at once. Like suppliers, manufacturers, consumers, everyone would push back and refuse the change unless there was some prospective gain, some incentive to do it, or unless it was just forced upon them, right, by some organized, super efficient, potentially cruel organization. So things in the socio-political domain, they actually tend to influence the technical. And with Bitcoin, it was released into the world at a time when there was no awareness of anything like crypto assets or Bitcoin. It was, a lot of people heard about this thing really early on and they wrote it off as a joke. There had been a lot of attempts at digital cash, non-state digital cash, but nothing had ever uh, put together the magic recipe, if you will, to make it work. So I guess actually to answer that question, the thing that made it work was proof of work at the end of the day. The way to anchor money into reality via requiring a real world energy expenditure. That's what makes it work. That's what gold mining is. That's why gold was money. It was the hardest thing to produce. So no matter how much time and energy you allocated towards its production, its supply increased the least, the most slowly and the most predictably, which made it the best and most sound substrate for pricing things against. It was the best measurement of value because it was the most predictably supplied money, effectively. So proof of work is what made Bitcoin work. But then what makes absolute scarcity possible, which is incredible, is the difficulty adjustment. So the more resources are allocated towards Bitcoin mining, the more difficult the algorithm becomes, such that it maintains a fixed course to that predictable supply curve that asymptotically approaches 21 million by the mid 22nd century. And that's just incredible, right? That's if you could imagine us trying to mine gold, and the more time and energy we allocated towards mining gold, the more difficult the gold became to extract. It's like an ever receding horizon. The harder we chase it, the harder it recedes, such that it is always issued on a very fixed and diminishing supply schedule. So that, like from a game theoretic perspective, where scarcity drives the value and utility of money, that makes Bitcoin kind of a perfect money.
Well,
So
it's interesting that you say that because when we're looking at what's happening right now at the price, where you had a ton, I mean, we hadn't seen such a massive pulling of hashing power offline that we saw on this previous difficulty adjustment where it went down negative 15, 16%
Mhm.
since 2011. And so
Yeah.
what's interesting about how the economics of that play out is because you had so many people pulling rigs offline and that 10-minute block speed that everyone's anticipating that's mining that for their flow of receiving payment for to pay their electrical bills
Yeah.
is now 12 minutes, which is a 20% reduction in the flow of how they're receiving payment. It'd almost be the equivalent of gold miners that are showing up for work and all of a sudden they're getting 80% of the paycheck they were receiving the day before in order to perform their labor. And so
Yeah.
you have an interesting dynamic there where the flow of those coins that are being put onto the market for sale or for the miners to then sell and convert their fiat to sale. I just find that whole piece just so elegant in the way it's executed. Um, it's mind
Yeah.
boggling. It's totally mind boggling.
It's the first living, breathing money, right? It's adaptive. It adapts to
Yeah.
human behavior. So the harder we chase it, the more difficult it becomes. The less we chase it, the more easy it becomes, such that it always adheres to that perfectly predictable supply curve. That's fucking amazing. I mean,
It's insane.
there's no money like that in history.
Yeah. I mean, it works like biology is what it works like when you look at how your
It
body
does.
adapts to its environment. So like
Yeah.
if you if you drink Coca-Cola every single day, well, it's not the best thing for you, but your body adapts in order to
Mhm.
receive that in a certain way. And now it might not be advantageous to long-term health, but your body's
Yeah.
adapting to that in order to deal with it. And
Yeah.
it does this in many different ways for people that study biology a lot. Hey, I want to
Yeah.
throw this question up here because this is going to be fun to hear your thoughts on it.
Yeah.
So,
One other, if you don't mind, on that
yeah,
last one, one more interesting thing about that is, and not a lot of people talk about this, the perfect predictability of the Bitcoin supply curve is the closest thing to perfect information we've ever had in economics.
hmm,
If you remember from Econ 101, we talked about like perfect competition, monopolistic competition, these things. Very few things in the world have anywhere near perfect information about their supply. Like we kind of learn it in real time as we produce things. But with Bitcoin, you know definitively what its supply is and will be forever. Like everyone
yeah,
knows that today. So I think that does a couple of things. It generates this reflexivity that's unprecedented because you get these giant FOMO waves, which are um, these bull peaks. And then I think over the long term, it's going to have this other effect is as this thing, you know, but continues to operate successfully and build more of a Lindy effect, more of a reputation, more trustworthiness across time, I think people are going to start front running that supply curve. Like as
yeah,
long as the market cap keeps expanding in line with its, stock to flow ratio or supply curve, whatever you want to call it, every time that cycle adheres, there's an increased probability that people are going to front run it. And that
yeah,
it sort of makes Bitcoin a self-fulfilling prophecy. And you're kind of back to this organic nature of it. That's really interesting.
yeah. I completely agree with you. All right. Let me get back to that question that I had here. Hey, first got to give a shout out to the brother-in-law, no coiner, who's going to become a coiner here within the next 6 months. John, welcome.
Pre-pointer.
All right. So
Everybody's a
here's the
pre-pointer.
question for you, John. Or I'm sorry. Question for you, Robert. What do you think of Plan B's stock to flow model?
Um, I think, first of all, I did really good work. This statistical analysis on it is sound, it's co-integrated, et cetera, et cetera. That said, um, I think it's not working right now. I don't think. I'm pretty sure we're below the stock to flow model, but that's just sort of one perspective on the whole thing. And March 12th, that Black Thursday event, we had this huge global flight to safety, rush into dollars. I think that is clearly what drove the decoupling from the model predicted value. I don't think it is broken per se, but it doesn't necessarily account for those exogenous events like that. Um,
Well, and
and
if I can add something to what you're saying there, so if anyone who studies Ray Dalio a lot, everyone knows his economic machine video accounts for money being two things. One, it's credit, which spends like the monetary baseline, and then you have the monetary baseline. And what people don't realize is that credit piece of it makes up a significant portion, especially when you're in an expansive period of time. And so when you get into a liquidity event where now there's a rush to the monetary baseline, which is only one of the two pieces of that, the other dries up as impairment on balance sheets. And so all along, that model that's been charted, and there's been no break in the model. I mean, you're actually very close to what the model's predicting right now at like 8,600, and I think the price is at what 60 or 70. Where's the price? 6,700. When you're looking at that as a percentage wise, you're well within the normal volatility around that price. But I think what you saw there was you saw that credit, you saw that impairment on the balance sheets, and you had an adjustment as to what the world was considering as money
yeah,
changed and contracted because some of it is not monetary baseline dollars. And so when I look at how the model's been charted over the last 10 years, you've been in this expansion period where money is expanding, and you haven't seen these really tight liquidity events happen like we just saw that was a result of the derivatives market from the supply and demand piece. So
mm.
to me, it's right on track. I mean, not too much of a change from the way I'm seeing it at all.
Yeah, I think the next big milestone is that end of 2021 prediction of around 100K USD. But yeah, to your point, in these liquidity crises, the analogy I like to use is if you imagine driving down the freeway and a big fog rolls in, such that your line of sight has been significantly reduced. That's effectively what happens when economic turmoil sets in. There's just a great deal of uncertainty in the world, and that's what money is. Money is an insurance policy against uncertainty because it's an instrument of pure optionality in the marketplace. Lets you buy anything you want. So that slowing down of the car is like a movement into cash. And when you have that happen all at once, markets aren't actually. This is another thing. People think markets are just kind of consensus driven. Not really. The prevailing market price is a consensus of the most motivated buyers and sellers, not the majority of buyers and sellers. So things can have a really sharp drawdown and a sharp rebound, as we saw with Bitcoin and some other asset classes. Um, and it's not to say that those types of events won't happen again. I mean, the existing financial system it's got a lot of breakages in it. And, we see central banks now pumping it with liquidity at an unprecedented scale and not creating that much of an uptick in the market. So again, I think it just sort of lends credibility to, my perspective that we're in the end game of fiat currency. These things are designed to self-destruct, and you're seeing central bank policy tools just as ineffective as they've ever been.
When I'm looking at all the printing that's going to have to happen in the coming year based on all the impairment, I mean, people are seeing this 6 trillion that they're talking about here in the U.S. and the other trillions that you could add into that globally. And from my vantage point, you have not even hit the iceberg yet. Like the water that you're in is just getting colder.
Yeah.
Because the amount of damage and impairment that you're going to have across corporations, across personal incomes, and then at the municipality level is just that's the thing that's not even going to hit for another 6 months from now is the municipality failures. Because come on, if you're a state government or local government, you can't print your own currency. You're relying on the federal currency, right? And I just can't imagine what the printing is going to look like, and how the government's going to decide as to who gets it and who doesn't. Like the fact that you have Boeing right now stepping in and immediately the first week they're asking for $50 billion. no strings attached, right?
Unbelievable.
This is the first week.
Yeah.
And when you're looking at how does all this work itself out, and you're looking at the fact that, I was listening to an interview with Bill Gates, who's been more right on this than any person on the planet as far as I'm concerned. Clear back to his comments in 2015 saying that this is a major concern and something that the world needs to be doing about this. But one of his comments that just struck me as being like, oh yeah, this guy gets it, was he goes, just to once you figure out what the vaccine is, in order to put it out at scale across the whole population, you need to start constructing that facility, which is a major facility for a major new drug. You need to start building that facility today, and you don't even know what molecules or handling is going to be required in order to get that thing up to speed once the vaccine is discovered, in order to start pumping this out at the volume and the scale that's going to be needed in order to start curing this. Because I
Mm.
think it was in Singapore, I saw either today or yesterday, they're now back on quarantine. They were on quarantine. They stepped back from quarantine. Now they're back on quarantine again
Mm.
because there's no cure to this thing. So I think the thing that the population's not ready for is you might get the all clear in May, the beginning or the middle of May or whatever, saying, all right, everyone back to work, let's go. Only to find out that in the middle of June, there's another quarantine. Hey,
Mm.
this entire city shut down. And so when you see that violent back and forth of
Mm.
expectations, especially for people that are in skilled labor that have been laid off, that now are just like, I have to find somewhere to work or I'm gonna not be able to make my payment on my house. Like just
Yeah.
basic things. People are not accounting for any of that and the amount of printing
No.
that's going to have to occur in order to just facilitate some of this.
Yeah. And I think there's a number of things there. So to have this total economic shutdown effectively worldwide, right? Not total, but say 80% of all economic activity has grinded to a halt. Um, you can't tolerate that for long in a society laden with debt, right? So now we're back to one of these fiat currency problems or fiat diseases where it actually incentivizes the accumulation of debt. And debt, as we all know, it fragilizes you. If you completely stop producing an income all of a sudden and you have debt to service, then your runway has been dramatically shortened.
Yeah.
I mean, that's being affected basically worldwide right now.
Mm-hmm.
And then two, the to get into the virus itself, and I don't know how many people realize this, but it was China's suppression of the original outbreak when it first happened in Wuhan. They did not disclose it to the world, right? They tried to contain it themselves. They sort of silenced the media in and around reporting the story. They allowed flights and travel to continue in and out of Wuhan while the virus was initially spreading. I think there were 6 or 7 million flights in and out of Wuhan. That's what facilitated the global pandemic state we are in now. Like the
Mm-hmm.
situation we are in is a direct result of China's state suppression of the story. Right? Had there been a more of a free market bottom up response to this, less of a top down authoritarian, heavy handed maneuver, I think we would have responded much more quickly to the disease and quarantined ourselves much more quickly. We gave it an incubation period. The government gave it an incubation period in China and then let the flights go out. So the way I see this through my lens is like this is highlighting so many insufficiencies of the state model in our world today. If you want to find inefficiency in the world in any industry, just go look at any government. I mean, they're incentivized to be inefficient effectively.
Yeah.
And I just for me this pandemic of one, it's breaking us because we're so burdened with debt, which is a direct consequence of state monopolized money, fiat currency, and then to two see um, this very inadequate response and even a state response that actually facilitated the virulence of the disease. I think it's really an eye opener
Yeah.
for the world we're living in.
Yeah, I think that people are seeing the response, are saying, all right, everyone's locked down. We're gonna once we get back to work, all these companies are gonna have huge demand signals and all that. Dude, I am
Yeah.
not there. I think, and I don't mean to sound like an alarmist by any shape of the imagination. I'm just looking at what this thing is, how it spreads, the lack of symptoms that a person has while they're contagious, the fact that there's no vaccine, the time that it's going to take to get a vaccine, and I just think that this thing's going to wreak havoc on the economy in the coming 12 months. Um,
Yeah.
and the solution when you have 0% interest rates is that you print more money is the solution. That's pretty much all that's left. And so
Yeah.
when we're talking about Bitcoin and you're looking at that setup, right, it's
Yeah.
pretty crazy.
Yeah. Yeah. And that is the solution under a centrally planned market for money, right? And there's another question that comes up a lot is people would say, well, if we were in a Bitcoin world and governments couldn't print money, how would we respond to this? Like, well, if we were in that world, people would likely have a lot more savings because hard money incentivizes you to save it. It
That's right.
appreciates year over year. Prices decline year over year. So you have a huge financial incentive to, save money, to hoard cash uh, for situations exactly like this, for the uncertainties of the future. So, yeah, for me, it just highlights the fragility of the fiat currency complex.
Yeah. Yeah. Just the fact that you're seeing businesses fail in the first week,
Mhm.
and we were quote unquote at the very top of the economic bull market, right? A 10-year bull market that was literally going parabolic. But
Yeah,
the first week of contracted sales on the top line of these companies' income statements, and you had mega cap companies stepping
yeah.
in saying, I need $50 billion
The same
today.
companies that have been using their free cash flow for the past 3 years to buy back their own stock, right, and to
Yeah,
do corporate executive bonus payouts, and it's just how much will the taxpayer tolerate? You know, we just keep footing the bill for all of these corporate shenanigans. I just, you know, there's a separation of skin in the game, effectively, where all these gains are being privatized at the government and um, corporate and Wall Street level, and when the losses happen, as they are now, they're being socialized onto the world through inflation. And I think as soon as people realize that cycle of criminality is a direct consequence of fiat currency, that's what drives adoption of Bitcoin in the long run.
yeah. Hey,
It's
so
not an
let's talk.
economic story, it's a crime story, right?
It's
This
a
is the greatest plundering of the Commonwealth repeated again and again throughout human history. It's crazy.
Yep. I mean, it all. Warren Buffett has a really famous saying: "Show me the incentive structure, and I'll show you the action." And boy,
Absolutely.
you could not get a better saying for fiscal and monetary policy globally when you have no peg. When no one has a peg, they're
Yeah.
incentivized to act this way. They're
Yeah.
incentivized
Absolutely.
in order to manipulate their currency so they can have cheaper labor inside their domestic country and to perform labor and export that labor in order to create goods and services that are more competitive so that their GDP goes up. And
Yeah.
so it makes total sense when you understand the incentive structure of why we're here.
Yeah. How
And
hard would anyone work if they had a money printing machine in their bedroom? It's all about the incentives.
yep. Hey, let's talk about a topic that I'm sure a lot of people will like to hear about: escape velocity.
Escape velocity. I assume we're talking about Bitcoin.
Yeah, we're talking about Bitcoin. So, what do you think escape velocity is?
Yeah, so I would interpret that, escape velocity clearly is the speed necessary to exit the atmosphere. And in a Bitcoin context, I interpret that as at what point has Bitcoin gone beyond a point of no return towards what a lot of people call hyper Bitcoinization, which would just be a global monetization event of Bitcoin where it starts rapidly outcompeting all other fiat currencies and alternative stores of value. Um, and I there's this is there's a lot of speculation about when this might occur, but I think what a concept that I get from my favorite author, who's Nassim Taleb. tell everyone go out and read all his books twice. Start with Anti-Fragile. The guy is just super prolific. He's like the Aristotle of our day. Some analogy like that. He's great, but he has this concept. I think it's an Anti-Fragile called the minority rule, and it basically says that an obstinate minority can actually impose its preferences on a sufficiently indifferent majority. And we talked about markets earlier, how it's not the price is not a consensus of the buyers and sellers. It is the most motivated buyers and sellers in a moment. That's what the market price is. So one of the examples he gives was that in 2008, a single $50 billion order in the stock market, which was less than 0.2% of the stock market's total value of $30 trillion, caused the market to drop by almost 10%, causing losses of about $3 trillion. So it just shows how like a very small nominal amount of market value, if there's enough motivation to sell, can move the market disproportionately, right? Can knock off 10% of the total market value. Another way I like to think of the minority rule is science and the scientific method. Like science doesn't advance by proving hypotheses. It advances by disproving hypotheses. It literally, whatever can be disproven is removed, and the body of knowledge left over is science. So it's whatever remains after we've removed everything else. And in Bitcoin terms, so another example he gives real quick is he talks about kosher meat and how, say, like 3 or 4% of the population eats kosher. Yet in New Zealand and South Africa, you see exports at like 80 or 90% of kosher meat. And that's because people that eat kosher will only eat kosher, but people that don't eat kosher will eat kosher or not. They're sort of indifferent to it. And so as long as the costs are relatively similar, that it makes suppliers and supply chains more efficient to just produce one type of good. So they'll lean towards kosher meat as long as everyone's just sort of indifferent to it. So in terms of, and that rule, that minority rule, where the preferences of the obstinate majority get imposed, the obstinate minority get imposed on the majority, tends to kick in around 3 or 4%. So if you have 3 or 4% of the population that has a very hard-nosed about a particular preference, that preference can be imposed on the majority. And so in terms of Bitcoin adoption, if you're looking at it in terms of number of hodlers, quote unquote, worldwide, you'd be looking at between 210 and 280 million people worldwide would be its sort of escape velocity. Or what I think is a more probably apt analogy for it would be market capitalization. And for store value worldwide, the low end estimate is about $80 trillion, which I think is around M2. The high end, which includes some other things like oil and real estate, gold, offshore banking, things like this, is around $280 trillion. So I think if Bitcoin gets to a market capitalization, say on the low end between 2.4 and 3.2 trillion, or on the high end between 8.4 and 11.2 trillion, you've hit that escape velocity. And as far as how long that will take, I think that low end estimate of say $2 trillion, we could breach that possibly in the next bull run here. I think that is, if I recall correctly, a $400,000 Bitcoin is around an $8 trillion market cap. So you'd be talking about $125,000 Bitcoin to hit that $2.5 trillion market cap.
And don't you think my personal opinion is that it's not just the protocol and the incentive structure inside the protocol that's going to drive us into those price ranges, but it's also going to be the external factors. So we just saw what a blow up in the derivative market can do to the price. Why couldn't you have something in the opposite direction also impact the price if you have certain events that take place? Call it, just total loss of trust because you have government just printing at obscene levels in order to cover the QE because they can't allow interest rates to go up. So let me give you an example. So my expectation in 6 months from now is you're going to have so many defaults in the loan in the real estate space that these governments cannot allow interest rates to go up. Well, they're going
Yeah.
to have to be a buyer at any price in order to keep interest rates at 0 to 1% in order to allow the prices of all this real estate to stay where it's at, and also to protect just people. I mean, most people have all their net worth in the value of their home. So
Yeah.
you start letting those prices fall, which is a function of interest rates. They just can't do it. So they're going to have to be buying QE at levels that we haven't even seen,
Yeah.
like not even close to what we've seen. And that's just the individual. That's not even talking companies. That's not even talking the municipality stuff that we were talking earlier. So like all of that printing is going to materialize itself and be an external factor in addition to the incentive structures that are already built inside of the protocol. What are your thoughts on that?
Yeah. In general, you know, it's important to understand that fiat currency is debt-based money, right? It's not money. It's not redeemable for gold. It's just monetized government credibility. And if you look at our, the U.S. government's credibility, it's what are we, $23 trillion in debt now? Like if we were a corporation, we would be a junk bond, but somehow we're still, high rated government bond because of military or whatever. So I think that, debt-based systems require steadily more debt to sustain themselves. So again, we're in this next wave of how much more money do we have to print? How much more debt has to be created just to keep the U.S. dollar and U.S. Treasury market alive? And all the while, this huge expansion of money and credit is juxtaposed over a diminishing supply curve of Bitcoin. So like it provides an exit option for individuals that want to opt out of the existing financial system, and it also just provides sort of an unstoppable free market floor where even if normally they would just print and print and print, as long as U.S. Dollar is a reserve currency, they can sort of externalize a lot of these costs onto other currencies worldwide. But now there's this alternative that they can't control the supply of, so it always sort of shows the score, so to speak, of what's actually happening. So it'll be very interesting to see, how much the Federal Reserve has to increase its balance sheet, to maintain homeostasis across all these domains you've mentioned, and then how much that actually impacts the value of the most inflation-resistant asset in human history, which is Bitcoin, right? So, in short, we're living in the most inflationary conditions that the world has ever seen. Mm-hmm. So it's very smart to have at least some exposure to perfect inflation-resistant Bitcoin.
So I like this question here. This is from Jason March. He asked the question, how will credit markets work if BTC was the peg?
Yeah, in a hard money world, debt is just much less of a thing. Again, today, there's a common saying, $1 today is worth less than $1 tomorrow, right? We're just used to the value of fiat currency being inflated away. But if you stop and think about this just intuitively, what do we do in an economy, right? We trade with one another to increase our collective productivity, such that over time, the things we produce, like this desk, should be easier to produce in terms of total man hours necessary to produce it as we get smarter, as we get better, as we become, as we increase the division of labor, as Adam Smith would say, right? In that world, in a hard money world where you've got, say, a predictably low and slow supply of gold pricing the productivity of mankind, prices should naturally decline year over year. As our productivity grows worldwide, prices should decline. That's just the way that's what the base function of the economy is to increase our productivity and decrease prices, decrease cost of living.
And if the value of your money is going up in that environment, it's
yes,
a counterbalance to, yeah.
Exactly right. It's common. Another common thing for us to not think about is that when we buy anything, we're actually selling money, right? You're always trading. So in a world where prices are declining, the same thing is your money is appreciating. So when your money is appreciating year over year, like imagine how that would change your thought process. If all of a sudden I could get that whatever hot rod car you want, but it's going to be 10% cheaper next year if I just hold on to my cash because I know my cash is appreciating. Like it incentivizes you to defer consumption. And Austrian economists would say this lowers your time preference. So it makes you a longer term thinker. And the flip side to that is savings are the source of investment. As people save capital, they only invest in projects that they think will outperform the net productivity of the world. So if productivity is increasing at 3 or 4% a year, you're only going to invest in a project that you think can do 10 or 12%. So to answer the question, I think the credit markets become much smaller overall. And in that space, I think Bitcoin will serve as the ultimate form of collateral, right? It's super liquid. It's immediately verifiable. Um, in a hyper Bitcoinized world, even a world where it's a few 10, $5, $10 trillion in market cap, it's much more stable in price. I think, you know, gold today is the pristine collateral that underpins central banks and nation states. I think Bitcoin will quickly fill that role. But in general, I think people will be much less reliant on debt and more reliant on savings in a hard money world.
But I think if you went back in history and looked at how large credit markets were throughout history, they'd be nowhere near anything that we got going. Now,
Not
of
even
course, we're
close.
living in a digital world, but like, there is no way they looked anything like this.
No, I think they were like definitely less than 20% of GDP, probably more in the neighborhood of 10%. Whereas today, what is global debt? 325% of GDP and rising rapidly. I mean, it doesn't even make sense. What is
Yeah.
325% of income debt? That doesn't make sense. It's not serviceable. So we're quickly approaching the end game of some kind. I don't know if it's a debt jubilee or what, but it's just not the level of debt we have today is not serviceable.
Yeah. Okay. I like this question here. Okay. What do you see as the biggest barriers for widespread BTC adoption?
Um, I mean, governments face an existential threat from all this. They clearly can. You can't regulate the Bitcoin network. There's no law that could, turn off open source software worldwide, but they can attack the endpoints. So they can more heavily regulate the exchanges. They could target the mining network a bit more, but it's a bit difficult to detect that. Um, so I think government is definitely a roadblock, assuming they choose to be. But back to the game theoretic side of Bitcoin, which a lot of people are pushing for this, is they're trying to get Bitcoin in the hands of policymakers, actually gifting them Bitcoin and sending them educational materials, things like this, which I think is a pretty good strategy of just getting these guys to have skin in the game. That can sort of change the tide a little bit. But I think the other hurdle, there's a lot of promise in the Lightning Network, which is a second order protocol that allows you to move Bitcoin. Basically, you can settle with finality in Bitcoin instantly versus waiting for, say, 6 on-chain confirmations, but you sacrifice a slight degree of the trustlessness associated with it. So we need more time and development at that higher order protocol level to make this thing super user friendly. But that all comes in due time. I mean, right now the incentive is to just accumulate or, as I say, occupy as much territory on the only absolutely scarce monetary network in human history. The strategy has always been to hold the most relatively scarce territory, and now we have absolutely scarce territory, and that's the new game. So,
If I was going to take a crack at that one, just I'm kind of curious to hear your thoughts on this. So, few months back, I can't remember how many months ago this was, but for whatever reason, Mark Cuban decided to pick on me with Twitter. Uh, and well, I guess I threw the first shot, and then he was firing back, and it was quite a back and forth. But one of the things that he said that just kind of made me roll my eyes was he goes, in my stadium, I allowed customers that are coming into the basketball stadium to pay with Bitcoin, and at the end of I don't know how many months, you know how much money I had? I had $700 of revenue that I raised from people paying with Bitcoin, and I'm thinking to myself, this dude does not understand that this is not about the transaction level. This is about the most fundamental core layer of settlement between central banks is what this is all about, because there's no peg, and
Yeah.
you've got runaway inflationary policies that are really driving the world mad. And I just couldn't understand how somebody with such a significant amount of revenue that comes through the door um, just is totally missing the boat on what this is all about. And I think that it's a common misconception that a lot of people have, is they think that this is about buying coffee, or this is about
Yeah.
like, it is not about that at all.
Yeah.
I'm just kind of curious to hear some of your thoughts on some of those ideas.
No, I agree that, and again, there's not much of an incentive to spend it right now. So those are concerns that are a little bit longer term. But yeah, it is base money for a global digital non-state economy. That's what Bitcoin is, right? It's disruptive to gold. We're not disrupting even the US dollar here. All fiat currencies worldwide are pyramid schemes built on top of gold. All right, they used to be redeemable for gold. They are no longer. In this pyramid scheme, the central bank profits from lower tier banks. Each bank profits from banks lower down the pyramid, and then you have consumers at the base level of the pyramid who have the maximum amount of wealth confiscated from them via inflation. That's what fiat currencies are. But Bitcoin's not competing even with fiat currencies. It's out competing gold. So I guess that's what makes it hard to
Mm-hmm.
digest for a lot of people. It's so profound, and you have to have knowledge across a number of domains, but especially on the Austrian economics side, which no one gets in school.
Yeah.
I have a master's degree in accounting and finance. There's never heard a peep of any Austrian economics my entire educational career. Um, but with the the beautiful thing about Bitcoin is that what used to be this philosophical debate between Keynesian economics and Austrian economics has now been converted into a real life market test, and it's just being proven. That hard money is superior to soft money, effectively.
Well, my reply to him when he said that he only had $700 or whatever,
Mhm.
I and he was like, "Listen, you don't have to." This was the comment. He goes, "You don't have to convince me. You have to convince all my neighbors and everybody else. That's who you've got to convince." And I said, "No, Mark, you're wrong." I said, "Where you're going to change your mind is not when half your stadium is showing up and paying with Bitcoin." I said, "Where you're going to change your mind is when the market cap goes over $1 trillion,
Uh-huh.
and you still got $700 worth of people paying for their seat at your games in Bitcoin." I said,
Yeah,
"That's when you're going to change your mind."
that's
Because
right.
it's not about that. It's not about
Yeah.
that at all. Hey, I want to put this question up here. I like this because I think a lot of people have this same concern. This is from Benny. He said, "The biggest doubt I have about BTC is what did we miss about BTC that guys like Ray and Buffett and the government are seeing, or that they're looking at?" I want to just take a stab at this really fast before I throw it over to you. Maybe it's not what they're seeing, maybe it's what they're not seeing. And you got to understand it from their vantage point. They are multi-billionaires. They're some of the richest people literally walking the planet. And so this is how they view the world. They're looking at their income statement for the companies that they run, and they're seeing that the top line's continuing to go up. They're seeing that they still have margins, right? Like from their vantage point, The old system is working. It's
Oh,
continuing to churn things out. What they don't see is they're looking at the political dynamics that are playing out, and they're just saying the world's going mad. Like this doesn't make sense. But the thing that they're watching closer than anything is that income statement, the balance sheet, the cash flow statement of their companies, and those look normal. They're operating, yeah, for like Buffett, for example, he's got his Geico and he's looking at his float and what he used to be able to go out and get 5% on his float back in the 2007 timeframe in the bond market. Now he can't get any of that because the real rates are nothing. And so that's why he's sitting on so much cash. He's sitting over $100 billion of cash. So those guys they're positioning themselves in a manner where they're being asked about this Bitcoin thing, and they're just like, listen, like governments control money. Like anyone who thinks that that's gonna change are kidding themselves, and they're just writing it off at that point. They don't need to dig in and find an alternate solution for making money. They're making money. They're crushing it. They're
mm,
crushing it better than anybody's ever crushed it in the history of crushing it. So I
no.
think that might be one of the main reasons why you're seeing this now. I think especially for Ray, I think if you see the price go over $1 trillion on the market cap for Bitcoin, I think Ray's going to look at this and say, all right, there's something going on here. Let me dig into this more. Let me find who the smartest person in the world is. Let me have them educate. And you might even see that with Buffett as well. But at this point, the fact that it's a couple $100 billion, they're looking at it like I own a company that's worth three times that, right?
Mm.
So they're just looking at it from a different lens, in my humble opinion. I'm curious what you think.
I agree completely. And then I actually put them in two different buckets. So for me, Buffett and Berkshire, those guys are super traditionalists. They don't touch tech. They don't get tech. I think 40% of his portfolio is banks, right? So he has almost this incentivized or willful ignorance about all of it. And whatever, he's missed every tech stock that's ever existed. So I don't think he's equipped to even begin to understand the value prop of Bitcoin. Ray, on the other hand, is super smart guy, has this amazing ability to digest complex economic concepts into a palatable format. His writing and research is great. I actually wrote an open letter to him, and it's called An Open Letter to Ray Dalio Regarding Bitcoin. And I went through the principles outlined in his book and explained to him how Bitcoin is an idea meritocracy, which the idea meritocracy is the cultural paradigm that Ray's book is centered on and that Bridgewater, his firm, practices effectively. And the idea meritocracy is composed of radical truth, radical transparency, and believability weighted decision making. And I went through some other principles, but Bitcoin is that. It's radically truthful. It's radically transparent. The decision making is made by people with skin in the game. So Ray really fascinates me that he can have such a bullish position and perspective on gold, but does not have the same perspective on Bitcoin, because ultimately the valuation fundamentals are very similar. Like if you understand what gold is and how gold emerged, then you should understand the value proposition of Bitcoin. So with Ray, I agree that maybe it's just a little too small for him to carry at the moment, but when it breaks a critical threshold of, say, $1 trillion market cap, he almost certainly will take exposure to it. Um, yeah, I think there's another. What's interesting about Bitcoin? It's sort of, I said it. It's this kind of resurgence of ancient wisdom and modernity, and I think I don't. This is my kind of a theory I have. I think in the digital age, because we all have like all the world's library at our fingertips and readily accessible, and information's kind of super fluid, that we're rediscovering our roots in a lot of places. So you see things like yoga and meditation and paleo diets and Ayurvedic medicine. All these things from ancient cultures and traditions are making a resurgence in the modern world. And it's interesting to me that Austrian economics, as a school of thought, is the distillation of all the world's ancient wisdom on economics. And now it too is sort of making a resurgence in Bitcoin into the world, which I think is really interesting. And there's a book, this is written by Carl Menger. I think it's called On the Origins of Money. And it's a great read. I think it's a free PDF online on Mises.org. It's very short, maybe 20 pages, very short. But he basically says that when new monies emerge, there's a very small group of people that understand it has superior, what he calls salability characteristics, which basically means exchangeability. And that small group of people sort of forms the kernel around which other people gradually adopt the money. So I think we're just in the very beginning of that for Bitcoin. Like very few people understand what money is at all, how it got started. I mean, I would say less than 1 out of 100 would know it. It takes a lot of digging. You don't learn it in school, um, due to a number of reasons. There's all kinds of problems with the education system we won't get into, but they don't teach you about the origins of money, to say the least. And I think these guys like Warren and Ray are just a product of that environment. They came up in this game where the points are denominated in fiat currency. And so long as that game works, that's how they play. But now an entirely new game is being built.
I totally agree with you. I know, like, you study Warren, and I mean his big thing is find a business with an enduring competitive advantage and buy it at a great price. Period. And so I think from his vantage point, he's like, hey, we could change the currency to whatever you want to use. I don't care. But as long as I have a business that has an enduring competitive advantage, that I purchase at an attractive price, the currency can change to whatever we want. We could be using seashells, and I'm still going to want to own the equity of that business. That's how he sees the world. He is not somebody who wants to dabble in currency trading and stuff. This is not his forte. It's not the thing he likes to focus on. And so, I mean, I think that's why he's just looking at Bitcoin. He's just kind of shaking his head. He says, I don't, like.
Yeah. Yeah, it's the same with Amazon. He just didn't get it.
Yeah. Yeah, I totally agree. Let's cover. Okay, you have a thing here in the notes. Does Bitcoin hoarding create a liquidity crisis? Does it stifle innovation? And I really like that last part there because I have some opinions on that. I'm curious where you see it.
Yeah. So there's like, I guess an old, and this is like pre-central bank propaganda too. They used to accuse these people for being miserly and like hoarding gold and saying it restricted money flow in the economy. But one thing to really understand about money is that, again, in a free market where there's a fixed, or say a relatively fixed supply of gold, for instance, and then there's fluctuating demand based on uncertainty, right? The more uncertainty in the market, the more demand for money there is, along with some other factors, but that's kind of it. Where those supply and demand curves cross is the natural interest rate of money. Interest rate is the price of money. At what price is it being lent out into the market based on
free market?
Demand? In a free market, not in a centrally planned socialistic central banking market. Absolutely correct. So in that world, the idea that someone could hoard money and constrict liquidity, it doesn't make a lot of sense because the free market has a mechanism that directly incentivizes holders of money to lend it out. So if there's a bunch of people, even if they sort of agreed to collectively hold money and not lend it out, sort of like a cabal or whatever, as demand increases against that supply of money, the interest rate goes up and up and up and up so that you have a fixed or a growing financial incentive to lend it out. So that increase in the natural interest rate becomes a natural incentive mechanism for holders to lend money into the market based on the liquidity needs. And that's just kind of a free market balancing mechanism for liquidity constraints. So I don't think that is as big of a concern. People seem to be fixed on this notion that we need a central bank to flood the market with liquidity when times are bad. But the thing, like all other free markets, it regulates itself via the incentives and self-interest of its market participants.
It'd be like
Um,
it'd be like in biology, if you started catching a cold, you would never want your body to be able to fight it off on its own. You want to just immediately take the medicine and not allow
yep,
your body to ever get sick
yep.
and develop an immunity to what's happening. That's effectively what you're doing when you have policies like that.
It's a super apt analogy because it creates a short-term analgesic effect, right? You kind of flood the market with liquidity, things get better, people are trading, nominal prices go up, but it exacerbates the long-term consequences because you've just distorted price signals, you've worsened the boom and bust business cycle. Yeah, it very much is like taking, I guess, putting a bandage where a more holistic cure is warranted.
Immediately, yeah.
Yeah, and then the part about does it stifle innovation? Again, in a hard money world, you're incentivized to save money, and savings are what underpin investment. Savings are lent out to be invested in projects that people think will outpace general productivity growth. So, increased savings lead to increased investment, lead to increasing innovation. So, Bitcoin would actually incentivize savings and accelerate innovation. Um, and the other thing that I tweeted a little about this the other day, the real interesting side of Bitcoin that very few people get today, and I love this quote, I think Connor Brown said it. A lot of people think Bitcoin wastes energy, but Bitcoin consumes wasted energy. So, what it actually does, Bitcoin becomes this energy buyer of last resort. And it's kind of like the ultimate unemployment relief program for unused or underused energy sources. And it acts as like this perpetual bounty program for energy, for innovation and energy production, because anytime you can produce energy at a lower cost than market, you have a direct financial incentive to do so. So if you can find a way to harness solar energy more cheaply than someone else, you can now take that competitive advantage and go mint digital gold with it. So it's this perpetual worldwide incentive program to become more energy efficient. And again, getting back to the purpose of the world economy, like energy efficiency and productivity, they're interchangeable terms. The more we can drive down the cost of energy and drive down the cost of living, the, the less hours per week we all have to work, right? If we could produce energy super cheap, you could compress people's work weeks from 40 hours down to 30, 20, so on and so forth. So Bitcoin is this really, it hasn't stood the test of time yet, but it's driving this renaissance in renewable energies. And I think it's likely to continue compressing the cost curve of energy going into the future. So the analogy I like to use is where fiat currency has an incentive schema that causes a race to the bottom in terms of currency devaluation, and that nations compete to print money as quickly as possible to acquire scarce assets before the currencies become worthless. Bitcoin sort of converts that incentive schema into a race to the bottom in terms of energy cost. So it gives everyone a direct financial incentive to produce energy more efficiently, as doing so gives them a license to mint digital gold coins. Like that's a really, really big deal. And I don't think anyone has come to terms with how profound that's going to change society.
That's totally nuts. Yeah, from the innovation standpoint, when I look at, and hopefully my sound is better now. If it's not, comment in there, and I'll make more adjustments. But when it comes to innovation, and I look at the last 80 years, you really kind of go back to the Bretton Woods Agreement in 1944, whenever the U.S. dollar got pegged to gold. And since that time, the U.S. and the globe has had an inflationary policy. Mm-hmm. When you have an inflationary policy that's run for that long, 80 years to color, let me just push my mic is saying turn it up even more. Okay, let's see if that works. So when you have that inflationary policy, and real soft. I'm sorry, I'm looking at the comments. Let me just one more time. Okay, so when you have that inflationary policy and you run that for 80 years, you, even if you run it for 1 year, when you have an inflationary policy in place, what you're doing is you're incentivizing people to make capital investments. You're incentivizing people to go out and innovate, because if they sit on their money, it's going to be worth less the next day. So when you run that policy for 80 years straight without any hiccups, and the reason I would say that it's run for the 80 years is because from 1944 up until you came off the gold standard, they were still running inflationary policies then, but they were actualizing the inflationary policies by adjusting the money multiplier versus the amount of gold that was sitting in the treasury. So you effectively had the same policies from 44 to 71 that you've had after 71, because they were acting like there wasn't a peg even then, because they were adjusting that money multiplier and forcing more and more cash into the system, which
More leverage.
incentivized.
Yeah.
And when you think about the entire world pegging themselves to the dollar, which was then pegged to that same gold that was being debased through the money multiplier, you effectively had a global incentive structure that incentivized innovation like we had never seen collectively on a global scale ever. Okay. So you run that, and then you run it clear out to where we are today, from 44 to today, where you've had this inflationary policy that has systematically produced this incentive structure to innovate. And let's think about how much innovation has happened in the last 80 years.
Yeah.
It's been indescribable. It's been, people look back in time like, well, it's just an exponential thing. And that's how we were able to just start doing machine learning at this point, right? Like, you look at some of the technology that's coming out, and it's mind blowing of how fast everything's moving. My opinion is that all of this mass innovation that's happened in the last 80 years is a direct result from those policies that we've seen from central banking. So now, as I look at, okay, let's just say Bitcoin does become a global peg. Let's say Bitcoin does become global money at that point. And it's deflationary money, because as people lose their private keys, there's less of it. Now what you're doing is you're setting a incentive structure in place that is the exact opposite of that. You are now incentive, and it really depends on how deflationary the currency is. If it's not very deflationary at all, well, your incentive structure is not going to be like anything like we've seen, right? But let's say that it is quite deflationary. I think that you're going to see a significant slowdown in the speed of innovation. Significant, because people who are sitting on large treasuries of Bitcoins, I know I can just speak for myself, like the Bitcoin that I have, I mean, I'm only going to invest that if there's one hell of an investment out there, right? Because guess what? It's going to keep going up. It's going to keep going up in value. That stuff is going to continue to appreciate in value over time. And so when I'm doing the math on the discount rate, like, I'm going to have sky high discount rates, which means I'm not going to be willing to pay much for almost anything when I'm doing valuations on businesses based on the free cash flows that they're producing. Like, it needs to be something that's really pumping out some serious cash flows for the money that I'm going to be willing to give up for a guaranteed more buying power in the future. And so when we think about that incentive structure, I think it's going to be very profound. And I think that I have concerns about the shock to the system, especially as we transition, because I think these next 2 years are going to be, holy moly. I think the shock to the system is going to be insanely profound. I think it's going to be very profound. And I think that the shift in the incentive structure is going to be drastic. I mean, you're going to have, think about how people function. They function off of their habit loops. So much of what you do in the day is pushed into your subconscious. Majority of it. People drive to work and they don't even remember driving to work. Like, it's so pushed into their subconscious. Well, that same thing happens on a macro scale with spending habits and how elected officials act and how they behave on a macro scale. It's just like how the brain works. So much of it is pushed into the subconscious. They're acting in manners. They're trying to push money into their districts. They're trying to do all these things that are just subconscious habit loops on a macro scale with how fiscal spending takes place, not just in the US, but pretty much globally, because of the incentive structures that have existed through an inflationary currency for 80 years. So now you're stepping into a world where that is now flipped on its head, and people are going to find out real fast that if you elect somebody who is not dialing back the spending and being responsible based on the tax receipts that they're receiving, that their buying power as a nation is going to just get obliterated.
Yeah.
Obliterated.
Yeah.
It's going to change so much. It blows my mind when I think about it.
A couple of things. Have you had the opportunity to read the Bitcoin Standard yet by
Yeah.
Safi Dinamos?
Yeah.
Did you read that? So I have to disagree with you on the inflation driving innovation piece. So I do agree, and this is as with socialism, right? Socialism basically as an economy that is adhering to one plan can mobilize resources and people much more quickly because it just sort of has a dictated plan. We're all pulling this direction. Let's go. Whereas capitalism, every market participant is operating in their own free interest. So things don't move suddenly in one direction, but it's a much more sustainable model, right? Because people are cooperating and competing across time, across reliable rules. So when I look at the past 80 years of inflationary monetary policy, what I see is there's been this extraction of wealth because inflation it's just taxation without representation. It's theft ultimately. It's you're stealing value from people that receive the money last, right, and giving it to the people that receive the money first, which is called the Cantillon effect. So I think what you've seen in the world, and the argument in the Bitcoin Standard is that most of the 0 to 1 innovations, using a term from Peter Thiel, were actually created in the 20th century, the 19th century and early 20th century when we were on a gold standard. And that the 20th century was actually just the one-to-many expansion of those innovations. So the actual scaling up, the marketing, the infrastructure build. But the innovations themselves, the original inventiveness, most of them actually occurred under a gold standard. So I would argue that under a hard money standard, the incentive schema actually, again, it makes you think longer term, and it makes you think more about savings and being much more savvy with your investment, such that projects that are deserving of capital actually get allocated capital. Whereas in a fiat currency model, you're always trying to get out of cash. When times are good, you're always trying to be in stocks or be in this or be in anything but cash, because cash is the only thing losing value, right? You've inverted the whole purpose of money. The first function of money is to store value, and you basically compromised it completely with fiat currency. And so what this does is you're distorting pricing signals. So these critical signals and feedback loops that entrepreneurs rely upon to adapt to underlying shifts in economic reality are broken, right? So you get we have this unicorn club now, all these billion-dollar companies that have produced no revenue. You've got, even in the public markets, you have companies like, Tesla is more valuable than any other car manufacturer in the world, and on like 1/10 the revenue, things like this. So you get massive price signal and valuation distortion, which just creates negative feedback loops. And I think this most recent unwind is a great example of that. We had the quickest drop in market history because we had the quickest expansion in market history the decade prior. So it's just increasing the volatility and decreasing the truthfulness of price signals. So I think that under a Bitcoin standard, it will benefit society not only being a hard money reliable savings technology that will underpin accurate allocation of capital and pricing of risk, but it also, the monetary network itself serves as an incentive, a bounty program, if you will, for cheaper energy, so that everyone on Earth is now hunting for cheaper, underused or unused energy assets. So all these things, there's a sort of a confluence of factors that lead to Bitcoin being the greatest driver of productivity in economic history.
I think this person's comment here is perfect for us to. Here, this person wrote, "As to innovation, you guys are probably both correct on different timelines." sense. I'll take that.
Yeah, it's. I love this quote about the comparison between socialism and capitalism. They say if you want to go fast, go alone, and if you want to go far, go together. When you go with one plan in socialism, it's you're moving really fast because everyone's pulling in the same direction, but it doesn't go very far because things change. Whereas capitalism, people are all the feedback loops are very tight, so people are constantly adapting to reality, so it can go very far. And that's why, if you're looking for longevity, free market's always superior to a centrally planned market.
Okay, so I just posted send your last questions. So we're probably going to get a barrage of final questions here from folks. We'll try to answer them quickly and do a rapid fire kind of thing. If you guys got a rapid fire kind of question, post it in there, and if we see it, I'll quickly just pop it into the queue and let it go. It takes a second for some of the questions to populate in here. Is there anything while we're waiting for that to happen? Is there anything that you would like to just, how do I say this, a pet peeve that just you hear over and over again that you just want to take a hammer to while we're
waiting? About Bitcoin, it's definitely these smart money guys telling me it's blockchain, not Bitcoin. I'm just like, they're the only market proven use case for a blockchain is Bitcoin. That's it. So if you're telling me that it's blockchain, not Bitcoin, it's just asinine. There was one question I could maybe hit on real quick. I thought was good. Said, when does Bitcoin turn into the risk-free rate of return, and when does capital start being the price of capital being risk-adjusted yield in Bitcoin terms? Like, what will the Bitcoin market cap?
Oh yeah, that was on our Twitter, I think.
Yeah, and so first of all, risk-free returns. This is another euphemism of central banking. There's no such thing as a risk-free return, right? This is just what the government calls the return on their debt, which assumes that they cannot default, but history clearly tells us otherwise. So I think risk-free returns are just a euphemism used in monetary socialism. And in a market run on a free market run on absolutely scarce money, you should see the value of Bitcoin again increase commensurate with global productivity, as money is effectively a call option on this productivity, as it's a call option on anything people can produce. So I think capital will be priced in Bitcoin terms gradually by early adopters, kind of like it is today. I know a lot of guys that are denominating their portfolios in Bitcoin. And then suddenly, which will be kind of in the wake of USD hyperinflation or hyper Bitcoinization, which is, that came from Hemingway's saying that's how you go bankrupt, gradually, then suddenly. I think as central banking goes bankrupt, that's what's going to change the price signal denomination from dollars to Bitcoin. And it's also the title of a great series of Bitcoin writings by Parker Lewis. If you guys haven't read that, well, then Chain Capital, he puts out some good stuff. But I thought that was a good question.
Okay, let's see here. Here's a question from Maddie. He writes, if fiat currency dies, hyperinflates, what happens to equities, or when do you ever withdraw them?
When do you withdraw out of the equity market?
Yeah, I think he's just getting at, so how's the stock market going to perform through something like this? And, in Ray Dalio's book, Big Debt Crises, he has a great part in the book that he addresses that exact question. He says, when you get into a hyperinflation scenario where the governments are printing full press, you're going to actually find that the stock market goes up through that period of time.
Oh, yeah.
The thing that I think is going to surprise people is that relative to the new currency or to that pegged standard that'll be used, your buying power is decreasing through that.
Oh.
So you can go back to Venezuela, you can look at Argentina. There's plenty of examples throughout history that you can look at stock market charts. They go up. They look really juicy in nominal terms, but in real terms and protecting the labor that you performed and storing that labor that you performed, that that buying power goes down into the future.
Mhm.
Now, there's going to be some stocks and some equities that outperform that index, and that would probably keep up with the new currency that's being adopted. But as far as what those are, that's something that you'd have to look at which type of companies perform well in a highly inflationary environment in order to be
Mhm.
positioned in that way. That's how I would probably answer it.
Yeah, I first of all, the best performing stock market in the world was Venezuela last year, right? So if you need a lesson in what hyperinflation does, it has this illusory effect where, again, as you said, it's driving nominal values through the roof, but in reality, there's not any actual safe haven of value being stored. Um, I think too in the stock market. First of all, I would say for me personally, right now, as a risk adjusted bet, I don't think there's anything better in the world than Bitcoin. With that said, if you still want to be in equity markets, it's a pretty easy function to just denominate those values in Bitcoin as well, just to give yourself a reality check, right? It might be surging in US dollar terms or whatever fiat currency you're in, but check it against gold or check it against Bitcoin, and that should give you a more realistic barometer of how it's performing.
I like this question. So Dan wrote, "Are all these puzzle pieces that are the world's economy speed up Bitcoin's adoption?"
I mean, if you had to put it in a real tight nutshell, you've got way more dollars chasing way less Bitcoin. And as long as those supply curves continue to diverge, like we keep printing more money, we keep producing less Bitcoin, that is equivalent to an increase in the USD value of Bitcoin. Flat out, that's what it is. The divergence of those relative supply curves. And just to give you an idea, the numbers are mind-boggling with this. So, in the year 2020, there are about 328,000 Bitcoin. So, I'm sorry, say it's 2021. So we have a full year of the new halving. There are about 328,000 Bitcoin produced in the year 2021. How many Bitcoin do you think are produced in the year 2100 annually worldwide? 0.31. That's how quickly the scarcity escalates in this money,
Yeah.
and that is what's driving the game theory and the rapid expansion of its market cap. It's like it's an unstoppable idea, as I wrote about. I mean, it's really mind-boggling.
Well, we talked a lot about incentive structures, and whenever you look at the incentive structures, and then you look at how you were talking about this earlier about the price tracking to the cost to mine. But when you have Moore's law allowing miners today to buy a mining rig that is outperforming miners of 4 years ago, and you look at the margins that these new miners are able to capture with these new rigs, that further compounds this incentive structure and this flywheel that keeps spinning the
Yep.
market price into the higher. So when you get into a halving event and all these miners that have rigs that are older that can't compete, they're shutting down their rigs. Well, guess what? All these miners that just purchased their new rigs, they're way in the money. They've got fat margins. They can handle the 50% reduction in flow that's now hitting the market, and they're
Yep.
mining the living crap out of it. And then they don't need to sell it either, because even though you took a 50% hit in the flow of it, they're still able to sit on not nearly as much offloading in order to compensate their electrical
Yep.
costs. And so that incentive structure, because you
Yep.
got Moore's law in there, is just grinding it
Yep.
all the more to track that
Yep.
energy cost. And after the halving event, you get a lot of the speculators that make it blow out within the next
Yep.
year and a half. But
Yep.
then the economic reality of the difficulty adjustment is what kind of brings it back into the harmony of where that intrinsic value of the energy costs are at. So whenever I look at that question, I basically say, I don't. I think no matter what, Bitcoin is going to continue to march along at that stock to flow model valuation metrics that we're seeing. The better question is are all these events that we're seeing today going to allow it to hit escape velocity where it separates away from that stock to flow valuation and it becomes a full blown global currency? If I
Mhm.
was going to answer that question, I'd say before this whole coronavirus and before all this mass printing that's going to be needed in order to deal with what we've got on our hands right now globally, I would have told you, yeah, it might go another 2 cycles. And when I say
Mm.
cycles, I mean 4 year,
Yep.
periods.
Yep.
It might need to go another two before you'd hit that escape velocity. Today, I'm looking at this next 4 year period and saying, yo, I think this is going to happen within the next 4 years. I think there's
Yep.
a way higher probability of that than the cycle after that.
Yeah. Again, you're back into that perfect predictability, right? As people see the economic consequences of this diminishing supply curve, and if it's actually driving market cap expansion and it's driving, hash rate growth, that you just start the game theory really kicks in, and you have to start front running it. So in the example of the miners you just gave, like there's an increasing period of time where people realize that, okay, the halving is going to drive this value, is going to flush out inefficient miners, and give a kick to the price. People are going to try to front run that more and more and more and more and more, right? So that just is more opex and capex coming into the mining network,
Yeah.
which feeds that positive feedback loop. So it's basically makes Bitcoin's mining network become more secure, which increases its demand as a store value, which increases its price, which makes mining more profitable, which makes even more capital expenditure come into mining, which makes the network even more secure, and so on and so forth. That's what's propelling the expansion and proliferation of its network. And it's just like nothing we've ever seen. We've never seen anything like this. It's a living, breathing, absolutely scarce digital money. And it's taking the world by storm. It's
It's
the
taking
fastest growing asset in history.
Yeah.
People are still disparaging it and writing it off, but it's growing across all metrics.
Yeah. When you look, so I'm just gonna pull up a chart here and hold on one second. I gotta share my screen. Okay, I think everyone can see my screen. So I just have the BTC price pulled up here, and I'm gonna set it since the start of the year. And this is what I find so fascinating about this. So here's BTC. Let me add the S&P 500 in here. Okay, we got that in there. And then let's just add gold in there to kind of show people what kind of performance we've seen. And this is from since the start of the year. Okay, Bitcoin since the January 1st of 2020, Bitcoin is down 3%, 3.3%. When you look at gold, it has outperformed Bitcoin, which is the first time in the last 10 years that you've seen an outperformance. Now our measurement here is 3 months, but it's
Mhm.
at a positive 6%. The S&P 500 with trillions of dollars of insertion is at negative 23%. And so whenever I look at this and you then look at the narrative of, oh, it's internet money, it's fake magic internet money and this and that, and it's tulips. And it's like, you do realize that since the start of the year, this thing has absolutely murdered the living hell out of the S&P 500 in one of the
Yeah.
most devastating market blows we've ever seen. So if it was tulips, then why the hell did it outperform it by 20% to date?
And I think it was last month, for the first time in history, the S&P was more volatile than Bitcoin.
Yeah,
So
which is
that's a big
crazy.
milestone. That's a huge milestone.
It's crazy.
Uh,
Anyway.
yeah. Um, I encourage people that don't get it or resist the idea or whatever, instead of trying to impose it on them, I say just keep asking the question, what is money? And just follow that rabbit and keep following it for hours and hours and read everything you can get your hands on. I would say read whatever you want. I would say focus on the Austrian school. That's going to get you the truth. You can read the Keynesian too. Actually, they have a terrible case for what is money, so that might help you see the light as well.
I
But
want
just
to
keep asking that question.
I want to share my screen real fast one more time. This is the hands down the best resource online for your journey from an education standpoint Jameson Loop is the name there. Just type in his name and type in Bitcoin information or resources with Jameson's name, and
Jameson
it's gonna be the
Lop,
first thing that
actually.
pops up on Google. And this thing goes deep. If you wanna study any question that you possibly have, you can find it on this resource. I promise you, I have no idea how many hours worth of information in here that will
Yeah.
tickle your fancy.
There was another question actually. Uh, Someone said they're going to be approached by a lot of friends and family over the coming months that want to learn more about Bitcoin. What are the three educational resources you would point them towards? And I'm going to shamelessly give four. The
Yeah.
first one I would give, which I think is it was my best attempt to make it as easy as possible. I have a pinned tweet on my profile. It's a tweet storm of 62 tweets, but I try to go from zero to what is money, what is gold, what is Bitcoin, to just give people a general understanding of what it is in 62 tweets. So if you can get someone to read that, I don't know what that is, less than 1,000 words. I think that's a good start. If you can get them to read a book, the Bitcoin Standard is very comprehensive. It goes through an intro to Austrian economics, history of money, covers what Bitcoin is. It's really good, very comprehensive. For someone that maybe understands Bitcoin or understands crypto but doesn't believe Bitcoin is different, there's a great Medium article called Unpacking Bitcoin's Social Contract, written by Hasu, that's Hasu. And he just explains why Bitcoin forks are non dilutive, and he explains why Bitcoin's rule set is basically optimal and how money is a social phenomenon. So he describes the social contract theory behind Bitcoin, which is kind of the idea behind it more so than the tech. And then if you want to get into, even deeper into the idea, that latest piece that I wrote, The Number Zero on Bitcoin, it just describes why absolute scarce money is an unstoppable idea that's disruptive to central banking. It's what distinguishes Bitcoin from all other crypto assets, and why the path dependence that led to its emergence basically prevents it from being disrupted. And it draws a lot of parallels between the discovery of the number zero and how it disrupted the church, and how the discovery of absolute scarce money is disrupting the Fed. So I think those are really good resources too, for depending where you are on your learning path.
All right. So give people a handoff where they can learn more about you.
Yeah, so I'm very active on Twitter. My last name is Breedlove. That's Breedlove. My Twitter handle is Breedlove22. I post there about Bitcoin, economics, philosophy, things like that. And then most of my writings I will post there, but I'm also on Medium. That's where all my essays are published. And then you can check us out. Check our website out is parallaxdigital.io. That's Parallax digital.io. We have a resources page as well, and a blog, and a few other pages that you can check out.
And I'll just tell you, folks, like, print this thing off, read this. This is the one article that I've got here from Robert, The Number Zero in Bitcoin. It is a hell of a read. And then he also has other articles that he's written on Medium. I would just tell you, click on his name on those Medium articles, and then you can see the other ones that he's written. It is well worth your time to go in there and read his thoughts. They're pretty incredible. So,
Thank you so
Robert,
much.
yeah, oh, my pleasure. It was a pleasure and an honor to have you here to chat. And I know just from the comments that folks enjoyed hearing some of your thoughts. So really appreciate it, and really
Awesome.
appreciate all the comments and questions that you guys have there. This is really a lot of fun for me, and I'm sure for Robert. And we need to
Yeah, this
do
was a
more of this.
blast.
Yeah,
Yeah, thank you so much.
yeah, we need to do it again. We definitely need to do it again. So
Let's do
other
it.
than that, that's all I got, man. I really appreciate your time.
Yeah, Preston, I appreciate it. Thank
Yep.
you.